Dear listeners of The Laundry, welcome back. Today I'm joined by Ben Brown in the studio. Now, Ben is heading up Strise's expansion into Denmark, and it's his first podcast episode. Are you excited to join?
Absolutely, Frederick. It's super good to be on The Laundry because, we've got a lot of listeners. And even more cool, today we're going to have the first Danish guest on it.
Welcome to The Laundry.
Welcome, Markus. Great to have you on The Laundry. Can we start off by having you introduce yourself?
Sure.
And also, of course, Januar that you work for, and describe some of your experience with risk.
Yeah, of course. My name is Markus Mølleskov. I'm 33 from Copenhagen. I am the Chief Risk and Compliance Officer in Januar and have been for almost 1.5 years now. Before that, I worked 7 or so years in banking, working with financial risk management in Saxo Bank and Nordea. And I have a master's in mathematical finance from Copenhagen Business School.
Awesome.
So in terms of Januar, Januar is a payment service provider, hopefully soon a payment institution, licensed by the Danish FSA. What we do is that we provide payment accounts for crypto companies specifically. So we are focusing on this niche that is heavily underserved. People always ask why we're called Januar. The reason is actually a good story. We're named after the Roman god Janus, who is the god with two faces, one looking into the past and into the future. And he's the god of transitions, doorways, and gates, and bridges. And Januar as a company is trying to build a bridge between the old financial industry and the new crypto economy. And we're also trying to be the compliance gateway that kind of weeds out all the bad actors in the crypto industry and selects that it's only the good actors in the industry that will be allowed to interact with the traditional financial industry.
That sounds like a really good explanation of kind of where Januar actually sits in the ecosystem, because it's obviously very diversified with exchanges, tokenization companies, NFT providers, DeFi, etc. But I think if you could just touch on kind of why there's a gap, I suppose, and what is that specific market gap you're able to address?
Yeah, I mean, we were originally founded because a member of our founding team and also a lot of founders in the Danish crypto industry that is within the network of our founding team have personally called every single Danish bank and said, "Hello, my name is such and such. I would like to open a corporate account." And then the banking employee says, "Yeah, sure, that sounds exciting. What does your company do?" "Well, I have this website where I sell bitcoins to private individuals." "Oh, I'm sorry you said Bitcoin. That's outside of our risk appetite, so we can't onboard you." No, try. Just hear me out. I've paid several 100,000 Danish kroner to a large Danish lawyer firm to help them, for them to help me with writing my AML policies and AML procedures. I'm registered with the Danish FSA. I'm doing everything I can to comply with Danish Anti-Money Laundering regulation and stuff. And the banks just don't care. It's just, you said Bitcoin, we can't give you an account, period. So that is what we are trying to do. We are suffering from the problem we are trying to solve ourselves. There are very few banks that want to, talk with us about helping us get an account so we can put that forward to our customers. But because we are very transparent about being compliance first, and that is a real ambition for us, we have been able to get a banking partner. So we are now able to provide payment accounts to our customers.
But how are your assessment unique then? Because obviously this is something banks probably would like to do themselves as well. So what type of risk indicators are you guys looking for? And what makes the Januar risk assessment unique?
Yeah, I mean, we are looking at a lot of different things, of course. One of the things that we are doing that no banks are doing is that we are, of course, buying up tools for monitoring transactions in the crypto space. So there are a lot of different tools, and we're utilizing them. When banks go out publicly and say our customers will not be able to buy bitcoins, then it makes no sense for them to go out and buy these tools and train employees in how to risk assess or how to monitor crypto transactions. Where we, on the other hand, say we are focusing on this niche. So for us, it makes total sense because we expect to get a lot of customers within this industry.
But would you say that this is something that banks will probably, in the long term, start trying to build themselves, or do you feel like being sort of niche and having the expert and domain expertise like you guys have, and being a third-party provider on this as on top, will sort of be the future business model that society will come to know and love?
Yeah, I mean, it's very difficult to say. What I can say is that even if the banks decide to go down this path, buying a Formula 1 car does not make you Michael Schumacher. So our CEO is the former head of customer success and head of training in Chainalysis. So he has traveled the world educating FIUs, educating FSAs, and educating all the big crypto exchanges on how to do money laundering. So he is literally one of the top experts in the world on doing this. So that is, of course, a huge benefit for us. At least on the crypto side. And then we have, of course, hired, AML experts from the fiat side. We've hired people from banks and consultancies, to help us on that side of the payment spectrum. So we have both sides covered. So I do think we have an edge in that case.
Yeah, definitely. I think, in some of our previous podcasts, we talked about like mixing and tumbling as one of the several methods that criminals, of course, use. And I guess when you're doing your assessments of potential customers, how do you kind of classify low, medium, high risk? And what would be some of the indicators you're looking for?
Yeah, and that's another thing that we are able to do that regular banks aren't, because we are focusing on this niche that everybody else say, okay, everything related to crypto, that's high risk. But we are able to say, okay, within this small niche of crypto companies, we can then zoom in and say, okay, what is low risk and what's medium and what's high risk within that industry? And that is sort of unique for us, which allows us to say, okay, this type of customer, that's a low risk within the crypto industry. This type of customer is medium and high risk within the crypto industry. And that is something we're looking at. And currently, because we're still young, we have just completely disregarded, high risk customers for now. And I would say that mixers and tumblers, especially with what we saw with Tornado Cash recently, that was put on the OFAC list. I mean, mixers and tumblers is not even a high risk customer. That's like a no-go.
Yeah, that makes sense. I think maybe picking up on one more example of that is, DeFi platforms, especially last year, surged. And is this kind of like, what's your view on that? You mentioned like kind of new, getting more like knowledge bases, but what's your assessment there?
Yeah, I mean, for now, for us at least, we classified everything DeFi as high risk, which means it's currently off base. We don't think that we have enough information in order to assess which DeFi companies are valid and which DeFi companies are elect actors. We are sort of waiting for this crash where all the elect actors go down and all the cases come up with all the bad actors, similar to what we saw in 2008 during the summer of ICOs, where everybody started the ICO. Of course, there were a lot of bad actors mixed in, and then during the crash in 19, it suddenly became very, very clear which ICOs were good companies trying to actually build something, and which ICOs were just rug pulls and scams and Ponzi schemes. And we are waiting a little bit for that kind of crash in the DeFi space and also a little bit in the NFT space to get that data to make assessment of which DeFi and NFT players we want to actually work with.
Interesting. Just a question on the mixing and tumbling part of this as well. It's easy for a company, or no, I'm sorry, not easy for a company, but a person that has some crypto. Maybe in the past they've used some sort of mixing or tumbling process. And we're talking, this might have happened 10 years ago. Does that still mean that it's a no-go? Like, or do you have some sort of cutoff on how long it would take before you'd look on the blockchain and see, well, this was the time and space basically, and for it to end up being legal funds over a period of time?
Not right now. No.
So no cutoff.
No cutoff at the moment. I'm not sure what will require us to change that. I'm not saying we wouldn't, but right now I can't see why we would.
Okay, interesting. And taking one step back as well, one thing I found really interesting just in general, sort of crypto and decentralized financing debate is DeFi versus traditional banking. Having a standardized way of handling money versus basically the new and modern type take on economy. Personally, I'd say it's like a very small fee to pay for a bank to take care of your money, and having the money centralized and having sort of a go-to platform where you can get help. They could take care of your money. You get advice. If something would happen, if the bank would get robbed, most likely you'd get the money back as well. Meanwhile, on the blockchain or in crypto, if you lose your ledger, or say you have it in some sort of account that nobody else has access to, and God forbid you'll be hit by a bus, nobody else would be able to retrieve that the money. So I'm curious, what's your take on this, like the entire DeFi versus traditional banking setup?
Yeah, I do think that DeFi has a place in the future, not necessarily the way it's set up now. I remember, my mother, when I first told my mother I went into to Januar, she was very scared. The first thing she said was, "Now you're not doing something illegal, right?" So I told her no, and I assured her that we are not doing anything illegal. Actually, we're doing exactly the opposite. We are trying to be, over compliant in most cases, and try to weed out and help, banks and other financial institutions figure out which are legal actions, which are not. But then she said something afterwards, which was that I don't think it will ever, become widely adopted. So why are you going into this? Is this, worth your time? And the reason she thought that is actually the important part, because she thought, I don't think I will ever understand how this works. So why would I use it over my Visa card? And I asked her, how does your Visa card work? And she couldn't answer. So understanding the technology is not necessarily a limiting factor of adoption. What I do think is a limiting factor is consumer protection, as you mentioned. Okay, if you lose your phone or something like that, what happens to your money? And another is ease of use, where, of course, you don't necessarily need to understand what's happening, but you need to be able to understand how to use it. And I do think that financial institutions going into the space, providing some of this consumer protection, providing some ease of use in terms of, if you lose your phone, we will be able to help you to recover your funds and that kind of stuff, I do think is necessary somewhat for wide adoption of crypto. And in order for financial institutions to go into the space, we do need more regulation. We just need to be careful not to over-regulate it.
Yeah. So this type of support, is this something Januar does provide or will provide in the future as well, to be sort of the intermediary on this?
Yeah. I mean, we are actually currently working on a product solution where we, in collaboration with banks, I mean, as I mentioned before, banks go out publicly and say they don't want anything to do with crypto, so they don't educate employees on how to monitor transactions. They don't buy the right tools. They don't really do anything, but they do have high net worth individuals who want to trade it. So the bank just kind of look away and let the high net worth individuals do that. And we are soon coming out with a product where we will say, okay, banks, tell your high net worth individuals, create an account with Januar. then we will, in collaboration or in partnership with the banks, we will then monitor those transactions on behalf of the banks and send customer risk reports based on our conclusions. So the banks can rest assured that, okay, we are allowing our customers to do something, but we know it's taken care of. We don't need to worry about it. And since this is a AML podcast, if there are any AML people sitting in banks who are worried about their customers transacting in crypto and not having an understanding of what's happening, please call me or write me or whatever. Get in touch, and we can try and talk about how Januar might be able to help you monitor these transactions.
Brilliant.
Yeah, I think on like, obviously we touched on like the partnership kind of model there to enable wider adoption, giving assurance to like the consumer space and things like that. But I think also, Markus, you mentioned like more regulation is needed, but not too much regulation. And obviously we're seeing the landscape really rapidly changing here for crypto firms, of course, and what they need to follow. How do you see that a little bit further on like the challenges side of the regulation, over-regulation, or the opportunities that come from more regulation?
I think, a lot of people are talking about, we need to be careful that crypto does not become shadow banks. And I agree, because then you lose the consumer protection and all that stuff, which is necessary for wide adoption. And you would get a lot of fraud and bad cases, which could potentially make the media consensus on crypto even worse. But on the other hand, we also need to make sure that there's a level playing field. So telling banks that, okay, for fiat transaction, we only need to do travel rules, so document the transaction if it's over €1,000. But for crypto, we need to do travel rule and provide documentation for all transactions, no matter the size of the transaction. That's not a level playing field, and that's also a bit hypocritical in my point of view. Because we've had these huge scandals in the past decade where banks have been caught doing money laundering, but for some reason, because the media says that crypto is used for criminal activities, because it was back in 2015, before we got all of these tools to actually monitor it, which we have today, then suddenly crypto is scrutinized a lot more and need to comply with much stricter rules than the financial sector in general, which I don't think is fair.
No.
It's still a fairly, I'd argue it's still a fairly new phenomenon, though. Still,
yes.
Like obviously,
it is
traditional banking. There's just trying to play the devil's advocate here. It's like there's lacking data still on sort of the dark numbers, obviously on both traditional banking and how much is money laundered there as compared to blockchain and crypto.
Yeah.
But
a lot is happening in the crypto space, but we do see it getting cleaned up. We have Chainalysis, where CEO work. They do an annual crypto crime report, which I highly recommend to read. And their crypto crime report for 15 was that about 33% of transaction volume in crypto was directly related to crime. 33%, that is a lot. But that was in 15. The number for 2021 was 0.15% of transaction volume that was related to crime. And the best numbers and newest numbers we have from IMF for the fiat world is that between 2 and 7% of global GDP is related to crime. So there's two things we need to note here. One is the difference in size, so 0.15% compared to between 2 and 7. So that's a huge difference in size.
Yep.
The other thing is the margin of error. You need to be quite sure, exactly. You need to be quite sure about your calculations to say, okay, it's 0.15. It's not 0.2, 0.1, but it's 0.15% of transaction sizes, or transaction volume, that's related to crime, compared to IMF, where it's between 2 and 7%-ish. We don't actually know. And that is a testament, in my point of view at least, to how transparent crypto is, and how easy it is to track transactions and figure out, okay, when is that transaction related to crime? Where in fiat, it's just, people don't know.
Yeah, so in your stance is that it's firmly way more secure knowing where the money goes, basically using crypto.
Yeah, I mean, in crypto we have full transparency. Media and people in general hear this a lot from when I talk to bankers, is that they talk about anonymity in crypto, and that is, I mean, it's not just false; it's directly wrong. It's the opposite. We have pseudonymity in crypto, which means that there's full transparency for all transactions. The only difference is when people talk about anonymity is that all transactions, or your address as it's called, is hidden behind an ID. So you don't know the physical person or legal person behind that ID. But since 2020, all crypto companies or all crypto exchanges and brokers have had a legal requirement to collect KYC documentation, which means that if the police spots a transaction going to a darknet market or a drug dealer or whatever on the blockchain, they can take that address of the sender of the money and they can follow wherever the money came from, or follow in the other end until they hit an exchange or a broker. They can then subpoena that broker and get the KYC documentation, and then they have the culprit. Where in the fiat world, you have to subpoena the bank of the transaction that they think did it. Then they will see, okay, the money came from another bank. They would have to subpoena that bank, and then they have to do that over and over again. And if that crosses countries and stuff, it just takes a really long time, and it's a really complicated process to investigate these type of crimes. Where in crypto, you can on-chain, you can track it from end to end, and you just have to subpoena the one exchange where the criminal tries to withdraw out fiat.
Yeah, really strong arguments. I'm curious, what's your go-to argument against crypto and for fiat in this discussion?
Against crypto.
Correct,
I asked me to play the devil's advocate against myself.
Absolutely, yeah. Well, it's nuanced. It's always nuanced.
Yeah, it's always nuanced, and I would say it probably comes back to the user protection. The stuff about if you lose your phone. People often compare your crypto wallet to a bank account, and again, that's like a misconception. It's not really a bank account, because in the bank account, the bank is there to help you do whatever, and if you make a wrong transaction, the bank can pull the transaction back and that kind of stuff. It's a better resemblance would probably be a small safe in your wallet, where if you lose that safe, or if you lose forget the combination to the safe or stuff, the money's just gone. There's no way to access the safe, and that's probably a better analogy. So what we need for wide adoption is that we need services, potentially from the established financial industry, that helps you reclaim that money if it's lost somehow. So that could be key storage or whatever, some kind of signature, like a bank vault, where you have one key and the bank has another key, and okay, if you misplace one key, there might be a third key hidden somewhere, where if you sign the right documents and that kind of stuff, you would still be able to get into it. Something like that.
Brilliant. And I really appreciate you playing the devil's advocate on this one. A final question on my end, at least, is where do you see the market going on this? Where's the industry in 5 years from now? Your industry, I mean.
I mean, if you're to trust the internet, it's to the moon, right?
Yeah.
That's the slogan. No, I don't know. It's very difficult to say. I mean, we start seeing more and more financial industry players going into the space. We see more and more actual value creating solutions coming out of it, instead of just new coins and that kind of stuff. So I do think it's here to stay, and I think it's only gonna get bigger. The question is just who want to be on the train, and who want to stay behind and jump on the next train and just be behind forever, kind of thing.
Absolutely.
Yeah, sounds good. And I think, well, at least from our perspective, of course, like AML KYC is one of the people on the train on this journey, and probably be able to help, of course, in that front. And compliance experts like yourself, I'm sure, will keep doing it as well. So yeah, I think super insightful, much more looking at it at a business angle, how it can actually be adopted widely, obviously. So yeah, really nice to have you on the podcast.
Absolutely.
Yeah.
Appreciate it.
Welcome. Thanks for having me.
Thanks, Markus.
Thank you.
Okay.